Namaskar and good morning. Today we'll take a look at DCB Bank Limited, which has produced very good results. DCB Bank was earlier known as Development Credit Bank Limited. It's a private sector bank with a network of 333 branches and around 504 ATMs. It was founded in 1930s, so fairly old bank, but it is growing only in the recent past. Headquarters is at Mumbai, Maharashtra. The non-executive chairman is Nasser Munji. The MD and CEO is Murali M. Natarajan. Some 3 months back, it was in a controversy. The SFIO, Serious Frauds Investigation Office, is supposed to have written a letter to the RBI to cancel the license of the DCB for a very small offence. Whether it is an offence or not, that also is uncertain, involving about 11 lakhs. So it was permitting some trading on NSCL or something like that, and that attracted the attention of SFIO, which wrote to RBI. RBI did not take any action on that. So it's not a serious offence anyway, and DCB feels that it is well within its rights to permit that. So I am also ignoring that. But because I saw it on YouTube, I am just mentioning also. Now let us go through the Q4 results. The interest on advances and bills is 661 crores, which has grown by 26% year on year and 5.2% quarter on quarter. Interest on advances, which is the foremost income, has grown by 26% year on year, not bad. The income on investments is 148 crores, which has grown by 38% year on year and about 8% quarter on quarter. Interest on balances with RBI, that's a small amount, so let us forget about that. Other income, 99 crores, has grown by 17% year on year and 5% quarter on quarter. In expenditure, the prominent expenditure is interest expended. Interest earned is important, interest expended is important. Interest expended is 526 crores. So we have seen interest earned on advances is 661 crores and on investment to 147 crores. So totally over 800 crores, something like that. Now interest expended is 526 crores. That has grown by 36.51% year on year and about 9% quarter on quarter. Employees cost is the growth is not much. Operating profit is 185 crores, which has grown by 31%. So fairly decent. 7% quarter on quarter. Operating profit is 185 crores of rupees, grown by 30.87 or 31%, you can say. Provisions are 34 crores only. And that has actually come down by 10%, very good. So provisions have come down by 10% year on year. Profit before tax is 150.5 crores, which has grown by 46.44% year on year and some 13% quarter on quarter. So profit before tax has grown by 46.44 or 46%. The net profit is 96 crores, which has grown by very impressive 50%, actually 50.02%, slightly above, and 12% quarter on quarter. So the growth in net profit is quite significant. It has grown by 50% year on year and 12% quarter on quarter. The equity share capital is almost static at 310 crores. Now the basic EPS also has grown by 50%. Gross NPAs have grown by 19%, net NPA has grown by 5%. The percentage of gross NPA is 1.84%, not bad. Percentage of net NPA is less than 1%, 0.65% actually. So that is also quite good. So NPA situation is reasonably good. Gross NPA percentage is 1.84%, net NPA 0.65%, and return on assets is 1.1%. That has grown by 21% in the current quarter. And quarter on quarter 7%, year on year 21% return on assets has grown. And current percentage is 1.1%. Not bad. Good. The market price as on date is 217.8 rupees, and there is scope for it to improve further because the net profit has grown sizably, income has grown, expenditure has not grown to that extent. The cost to income ratio is 53.71% for Q4 and 56.88% for the whole of FY19. The cost to income ratio is good, it is coming down. For Q4 it has come down. For the year it is 56.88%. From there it has come down to 53.7% for Q4. The return on equity is 13.69% for Q4, which has increased from 12.08% for the whole of FY19. FY19 is 12.08 for the whole year. Now return on equity for Q4 is 13.69%. Return on assets we have seen 1.1% for Q4, but 0.99% for FY19. The balance sheet size, equity, deposits, borrowings and others. If you add up the whole thing, it is 35,791.8 crores. The deposits are of that deposits are 28,435 crores, a growth of 18% year on year. Deposits have grown by 18% year on year. CASA deposits. CASA means current account and savings bank account. These deposits have grown by 17% year on year to 6,810 crores. Now retail term deposits have grown by 31% to 15,832 crores. Net advances have grown by 16% year on year to 23,568 crores. The credit deposit ratio is 82.88%, very impressive. Operating profit is 185.3 crores, that is 31% year on year growth. Now this is for the Q4, 185.3 crores operating profit is for the Q4. For the whole of FY19, if you see, 646.6 crores. So the growth is reasonably impressive for the DCB Bank. The profit before tax we have seen earlier, 150.5 crores, growth by 46% year on year. But if you take for the whole year, 506.5 crores for FY19. Profit after tax we have seen earlier, 96.3 crores, growth by 50%. And for the whole year if you take, 325.4 crores for FY19. Q4 net interest income, if you see that, we have seen interest earned, interest expended, etc. Now the net interest income, interest earned minus expended, 300.9 crores. That is 301 crores for Q4 and 11,149.3 crores for FY19. Net interest income. Interest earned minus interest expended is net interest income. That is significant. That also is growing. So like that, it's going on very well. Other income also is 99.3 crores for the quarter and 350 crores for the whole year. The cost to income ratio is 53.71% for Q4. The net interest margin for Q4 is 3.78 and for the whole of FY19 is 3.83%. Net interest margin is quite good. Of course, HDFC Bank, etc., is above 4%, 4.3%, something like that. But anything about 3.5% is quite impressive. Here for Q4 it is 3.78%. For the whole of FY19 it is 3.83%. So it is quite impressive. The yield on advances also is impressive, 11.59% for Q4 and 11.29% for the whole of FY19. The cost of funds is quite low, 7.06% for Q4 and 6.75% for whole of FY19. We have seen gross NPA is 1.84% and net NPA is 0.65%. Provision coverage ratio is 78.77%. Now, how is capital adequacy? Capital adequacy also is quite good. CRAR is 16.81%. So it has got huge scope for further lending, etc., without further borrowing. Tier 1 is 13.1% and Tier 2 is 3.71%. So this is how DCB Bank has fared. It is going on very well, and I do hope that the small controversy of enabling its depositors or customers to trade on NSCL or something like that, which SFIO has taken notice of in a serious way. Not a serious thing from my viewpoint also. It came on some TV channels and they also said it is nothing serious. The whole amount involved is hardly 11 lakhs. How can it be a serious fraud? Or anyway, it is not a fraud at all. So DCB Bank is quite good. So it has fared well, and it is expected to fare well in the coming days also. It is in safe hands, it seems. The management is doing well, but it has to steer clear of controversies. Should not go beyond normal banking channels. That one thing it has to remember. Getting into unnecessary controversy is bad, even if it is only 11 lakhs. Thank you. I will be back with you with another good investment grade company.